Hey guys, welcome to another Damilola Forex Academy video. In this video, I'm going to be doing a pure price action breakdown while emphasizing how to set a price action driven stop loss on each and every opportunity. And I'm also going to be showing you our 3 different entry variations. That is, as soon as an opportunity shows up, we have 3 different entry variations for that opportunity. And I'm going to be showing you using strict price action methodologies how to set a proper stop loss with either of these entry methods. So sit back, grab a pen, grab a book, and I'm going to be holding you by the hand into the understanding and mastery of setting a proper price action driven stop loss. Let's go, guys. Before we go on to the video, I want to let you guys know that my course and my mentorship program is currently discounted from $300 to $150. That is a 50% discount. And my goal is to make it more affordable for everybody to come on board. Of course, this discount is not going to last for long. It's only going to be for a few days. So it's an opportunity for every single person to come on board at a 50% discount. In my mentorship program, I'm going to take everyone through the understanding and the mastery of price action for 2 months. So it's going to be an intensive 2 months where I take you from point A to point Z through multiple areas of price action that cuts across an extensive teaching of a proven multi-timeframe analysis, mastering key value zones in the market, introduction to a revised trading plan, and multiple areas of price action trading. So I'll be looking forward to have you all on board. Link in the description below. And let's go back to the video. Okay, to set a price action driven stop loss, of course, there needs to be a trade opportunity. Okay, so that means before you can set a stop loss, you need to have a trade opportunity. Okay, and in having the trade opportunity, you need to do a multi-time frame price action driven analysis. That is, you have to analyze the market from the monthly time frame and go down to as small as the 1 hour or the 30 minutes time frame to look for a trade entry opportunity, then apply our price action driven stop loss to whatever opportunity that you are seeing. Okay, so let's go over a quick multi-time frame analysis. Then we'll go to the other part of setting a price action driven stop loss regardless of any of our entry variations that you use in entering the trade. Okay, so my subscribers will be familiar with my technical analysis right now. We all know that the first thing I do whenever I come to the charts is what? Start from the biggest time frame in the market, then identify the real-time point where prices is at. Okay, so clearly we know that prices is currently at this point on the monthly time frame. Okay, it's an organized stepwise process that will follow. Okay, so now that that is done, the next thing we'll do is what? The next thing we'll do is we'll try to read the structures that took prices to that point. Okay, we all know that the monthly, weekly, and daily defines the overall direction of prices, while the 30 minutes and 1 hour and even the 4 hours sometimes are our entry time frames that allows us to pick trades either in the overall direction or against the overall direction. We know that if we are picking trades in the overall direction, that means we are trading in the direction of trend. While if we are picking trade against the overall direction, that means we are trading a retracement. Okay, so let's go on and identify the structure that took prices to the real-time point on the monthly time frame. Okay, so clearly we can see prices make consecutive higher highs and higher lows, consecutive higher highs, higher lows. Okay, and in regards to the monthly fractals, this is the last higher low. Okay, in regards to the monthly fractals. Okay, why is this the last higher low? This is because there is no, first of all, it's important to know that fractals are measured by the length of their exhaustion. Okay, and the rules of fractal says that what you can go from small to big fractals, but big to small fractals must be separated. Okay, so we can see prices go from small fractals here of push exhaustion to making a larger fractal here of push and exhaustion. Remember, fractals are never about the push, but instead they are about the exhaustion. Okay, so this exhaustion right here, by the time we calculate the pips, we'll bring our crosshair tool and calculate the pips from the highest points to the lowest point right here. It's about 1,688 pips. There is no exhaustion in front, including here, that has that length of pips of 1,600. This means that what within the confines of this of the monthly time frame, this is a separate fractal. Okay, because what at 1,600 plus pips, there is no exhaustion in front of it that shares equal or more length of pips, okay, or more pips in regards to that fractals. Okay, so this is a separate fractal. So this means that what we are going to go down to the weekly time frame and look for opportunity within the confines of smaller fractals. We all know that eventually when prices breaks this bigger fractal, we will say that what, okay, prices has broken the fractal of this point. Price has broken the last higher low right here, and it will give us an opportunity to either the 61.8 for take profit or the 100.0 of for take profits, depending if we are trading a retracement or if we are trading the direction of the trend. That will be ours to find out at that point. But right now, prices has not broken the last higher low yet in regards to that fractals. This means that what for us to look for a trade opportunity, we are going to go onto the weekly time frame and read these smaller fractals. Okay, we'll look for a break of structure within smaller fractals. Of course, we know that what for us to get a trade entry opportunity, there must be a break of structure. If there is no break of structure for me, then there is no trade entry opportunity. Break of structures are what signifies a trade entry opportunity for us. Okay, so now this means that what we are going to go over to smaller fractals and look for what? And look for a trade entry opportunity within smaller fractals, that is within this window right here. Okay, so we'll take this window of this low and this high to the weekly time frame. Okay, so on the weekly time frame, this is the low that we identified and this is the high that we identified. Okay, so let's read the structures together. Okay, so clearly on the monthly time frame, we saw prices make clear structures of higher highs and higher lows, letting us know that what prices is bullish. Let's see what the weekly tells us. Okay, we can see prices start on smaller fractals right here of higher highs and higher lows. Then prices eventually went here to establish big fractal right here, higher highs and higher lows also at this point. Okay, so in regards to these fractals, this is the last higher low when we're having conversations about these fractals. This means that eventually when prices breaks the last higher low, it's going to give us a trade entry opportunity to either the 61.8 of the broken fractal or the 100.0 of the broken fractal, depending if we are trading a retracement or the direction. At that point, we are going to make that decision. But right now, this is the last higher low in regards to these fractals. This means that what there is no exhaustion that shares equal or more length of pips ahead of this one. So that means in regards to that fractal, this is the last higher low. Okay, so we are now going to look for a trade opportunity within smaller fractals. Since prices have not broken the last higher low yet, we are going to look for a trade entry opportunity within smaller fractals, within this window right here. Okay, we'll see where a break of structure has happened and look for a trade entry opportunity. Okay, so just like the monthly has shown us, the weekly is also bullish. Okay, so we are going to take this low and this high right here to the daily time frame. Okay, so on the daily time frame, this is the low we just identified and this is the high that we just identified. So what are the structures? The structures are push, exhaustion, price down on smaller fractals, push, exhaustion, and price establish bigger fractals, push, exhaustion, push, exhaustion, push to this point. Okay, so clearly without any doubt, the monthly, weekly, and daily has shown us that prices is bullish. Okay, so in regards to this fractals, this is the last higher low right here. Remember that what this is not yet an higher low because it does not have an higher high. Higher lows are only established when there's an higher high, so this is not an higher low yet until it has an higher high. So in regards to these fractals, this is the last higher low right here. Eventually, when prices comes and breaks the last higher low, it's going to give us a trade entry opportunity to either the 61.8 of the broken fractal or the 100.0 of the broken fractal. But right now, as far as this point is concerned, what are we going to do? We are going to go and look for trade entry opportunity within the confines of smaller fractals. Okay, we're going to look for a trade entry opportunity within the window of smaller fractals, since prices has not broken the bigger fractal. So we'll take the fractals of this low and this high right here to the 4 hours time frame. Okay, so on the 4 hours time frame, you can see prices make push exhaustion of bigger fractal here, separated it. Okay, we have to separate big fractals and small fractals. We know this by now. Then prices made a smaller fractal right here. Okay, how do I know that this is a bigger fractal and this is a smaller fractal? It's very simple. We'll measure it. Remember, this is a high, so the low, this is what, about 96 pips. Then if we pick this from the high to the low here, this is about 65 pips. So that means that what, this fractal is a bigger fractal and has to be separated. Okay, a break of a small fractal does not affect the big fractal. And just like we said, big to small fractals must be separated, while small to big fractals can be traded together. Okay, so this is a separate fractal. Then prices came here, made what, push exhaustion. Okay, so this fractal has not yet been broken yet, because we all know that what, a break of fractal can only happen when prices breaks a structure. And right now we can see that what, the higher low is still holding right here. This means that what, the structure is not yet broken. Okay, so now we've seen several movements of prices around here. So what are we going to do? We are going to go over to smaller fractals in 1 hour to see what is going on and to see if there's a trade entry opportunity within the confines of that. Okay, so this means that what, we are going to look for a trade entry opportunity between this high right here and this low right here. Okay, so let's cancel it. We'll look for a trade opportunity between this low right here that has not been broken and still holds, and this high right here. This is where we are going to go onto our 1 hour time frame to look for a real-time trading opportunity, since the structures within these boxes, since there could be an opportunity within these boxes. Okay, because what, the last higher low right here has not been broken, so there's no trade opportunity below until prices breaks that low. But while what, we look for a trade entry opportunity right now within the confines of smaller fractals right here. So we'll take to the 1 hour time frame. Okay, so on the 1 hour time frame, let's zoom out a bit. On the 1 hour time frame, this is the low that we just identified on the 1 hour time frame. Then this is the highest point that we just identified on the 1 hour time frame in regards to the fractal opportunity. Okay, so we had seen prices make what, in regards to this fractals, price had made what, push exhaustion. This is a bigger fractal right here. This is the last higher low of this fractal. Then all of these are smaller fractals. If you measure it, then this was where what, the break of structure happened. Okay, but we all know that what, if a break of structure happens, and in this case we know that what, we know that overall prices is bullish. This means that what, if we are selling, this means if we are selling a retracement, because overall prices is bullish. This means if we are selling a retracement, and this means that what, a retracement in a retracing market, we cannot go beyond 61.8. So even though a break of structure happened here, let's bring the Fibonacci from the low to the highest point. So even though a break of structure happened below 61.8, still there is no sell opportunity for us, because prices has already exceeded the maximum available for us in a retracing market. Okay, so that means 61 point has been exceeded. There is no trade opportunity for us. Okay, so now that that is done, we know that what, there's an opportunity for prices to what, within the confines of that fractals, to break the bearish structure that brought prices down. So what are we going to do? In this case, we'll identify what, potential key reversal areas. Okay, so what are potential key reversal areas? These are areas that prices get to and most likely may not be able to go beyond. Okay, so now we can see prices broke 61.8. This is a potential key reversal area. Then we can see prices establish this support here. Okay, and this support here was the support that prices eventually turned to a reversal area and eventually respected and went back up. Then we also identified 100.0 as a key reversal area, but eventually this support level acted as the strong key reversal area, and it is the reversal area that broke the bearish structure and sent prices back up. Okay, so now what did prices do within the confines of these fractals? Remember that what, prices was at a key reversal area right here. Okay, so what did prices do? Prices decided that what, when it got to that key reversal area, that it was not going to go down anymore. It decided that what, okay, it's going to go back up. Okay, so how are we going to take advantage of that opportunity? Clearly, we know that what, if we are buying to the 100.0. Okay, because if we are buying in the direction of trend. Okay, so now let's identify the structure that took prices down and where the break of structure happened. Okay, so let's zoom in a little bit. Then this is the structure right here. Prices established small fractals first, push exhaustion. Prices came here, made the push, made the exhaustion at this point. This was the last lower high in regard to that fractals. Then prices came down here to that support level, all of this support level right here, and prices broke structure. So this means that what, prices has broken all the structure that starts from here. All of the structure has been broken, and what, prices is coming here. Because if we're buying in the direction of trend. This means that what, we are going to buy to the 100.0 of the broken fractal. Now, here's the 100.0 break of Fibonacci from the highest point to the lowest point of the broken fractal, and you can see your 100.0 at this point. So this means that what, this is where our take profit is going to be, because the rule says that what, if you are trading in the direction of trend, you should take your profit at 100.0. While if you are trading a retracement, you should take your profit at the 61.8. So clearly, without any doubt, like we said, we are going to be exiting at 100.0. So let's go ahead and read the structures. Okay, let's see where the break of structure happened, just like we identified again. Let's just go ahead and re-identify it. Okay. So clearly, we are going to be exiting our trade at the 100.0. So let's go ahead and re-identify the broken structures. We've already done that before, but let's re-identify the broken structure. Price line on smaller fractals, then price established big fractal. Then this is the last lower highest at this point. Prices came down to this level and prices broke the structure. Okay, we all know that what, we are exiting our prices at this point. Now, it now takes us to the stop loss, using the proper price action driven stop loss in regards to price action. Okay, so we know that what, whenever there's a break of structure, we have three entry variations. Okay, and it's important that we all pay rapt attention to this. We have three entry variations. Okay, so whenever a break of structure happens, you can enter directly at the break of structure, like on this candlestick. It's a good entry opportunity. Now, it's important to note that your stop loss has to be price action driven, which means that what, it has to be below the last low. Your stop loss is going to be at this point, below the last low, while your take profit is set at the 100.0, since we are trading in the direction of trend. Okay, so that is very important to note that what, when there's a break of structure, remember this is a break of structure, you can be able to buy here at this point, put your stop loss at price action driven at this point, then buy to what? Buy to the 100.0 of the broken fractal. So your stop loss is set below the last low if it's a break of a bearish structure. While if it's a break of a bullish structure, your stop loss is set above the last high. Okay, so for example, if it's a break of this smaller fractals here, okay, I want to do the bullish example for all of us. Push exhaustion, push exhaustion, push. Clear break of structure at this point. Okay, so this means that what, when the break of structure happened at this point, let's make it, very clear. When the break of structure happened at this point, this is a good sell with your stop loss above the high right here. So if it's a break of a bullish structure, your stop loss has to be set above the last high. While if it's a break of a bearish structure, your stop loss has to be set below the last low. So it's important to set a stop loss using the simple price action driven rules. Okay, so let's just go over it again. In regards to this break of structure, if you are entering the trade, this is where the break of structure happened. This is your correct entry. Then your stop loss is what, at the low. Then what, your exit is at the 100.0 at this point. Okay, so that is entry variation 1. Now, like I said, we have three variations of entry. Entering at a direct break of structure is entry variation 1, and I've shown you all how to set your stop loss using entry variation 1. Now, when it comes to entry variation 2, this means that when a break of structure happens, we allow prices to make a quick retest of 61.8. This means that whenever a break of structure happens, prices usually makes a natural 61-point retest. Okay, so we'll bring our Fibonacci from the lowest point to the highest point at this point. Okay, so that is the lowest point of here. Now, just to make it clear, the lowest point of here to the highest point of here. So this is the 61.8 right here. Okay, so using entry variation 2, what are we doing? We are entering our trade pinpoint at 61.8. That's what we are doing using entry variation 2. Entering our trade pinpoint at 61.8. Instead of entering at the direct break of structure, we will wait and allow prices to give us a retest. When prices does that, we'll enter our trade pinpoint at 61.8. Then our stop loss is going to be price action driven at the last low right here. Okay, so even though we are entering at an earlier price point at 61.8, our stop loss is still at the last low right here. Okay, then of course our take profit is still the same at this high. So using other entry variations can sometimes give you a better risk reward on a single trade opportunity. Okay, so that is how to set your stop loss using entry variation 2, while using entry variation 3, where we are going to set our stop loss on this same trade opportunity, is going to be different, because entry variation 3 entails using entry using smaller fractals. Okay, so clearly the break of structure has happened here. So using entry variation 3, we are going to go down time frames to like the 1 hour. It's even clear, sorry, to like the 30 minutes. It's even clear on the 1 hour, but we are going to read the structures that brought prices to 61.8, and we are going to buy at the break of the small structure that brought price to 61.8, and we're going to put our stop loss below the break of that structure. Okay, while our take profit is still at the top point. Okay, so let's go to like the 30 minutes just to see the structure clearer. That's the structure that brought prices to 61.8. Okay, so this is the structure right here. It's made push exhaustion at this point. This is where the break of structure happened. Then prices made push at this point, then clear break of structure happened. So this is a good entry for us, while our stop loss is price action driven at the low right here. Okay, so even when all this retracement happened, it's not going to affect our entry. So for our entry variation 3, that's when we have a different way of using the stop loss. Instead of putting the stop loss at the low here, we'll put entry variation 1 and 2. Okay, we are using a shorter stop loss, and this is because we are entering our trade using smaller fractals, but still our stop loss is price action driven at the low, because we are entering here and we are putting our stop loss at the low right here using the price action driven stop loss from the smaller fractals. Okay, so this is where our stop loss is going to be, while our take profit is still going to be the same. We are going to be buying from here and taking it to the top at this level. Okay, so this is how to set a price action driven stop loss using our 3 entry variations. Okay, so if you want to learn more, you can click the link in the description below to join my mentorship program. I have a course that is also written in explanatory terms, simple, comprehensive terms, where I wrote out all of these things. And beyond this, I also have a mentorship program where we are going to have multiple classes in a week, where I'm going to take you by the hand into the understanding of all of these things relating to price action, and you can go forth to make some substantial profits and gains and become a successful trader. So looking forward to see you all in the academy, and see you on the next video, guys.